I've known Preeti for actually almost a decade now, which is actually kind of crazy since
Yeah.
2013 at A16Z when Bitcoin was only $1 billion. As they say, the first billion is the hardest. And Preeti has leveled up a lot. That's actually why, I gave a thumbs up on her for the course. She kind of, she won't brag about herself, but she like scaled from USC to Goldman to A16Z to Coinbase. Each jump there is not one that most people can make, and self-taught herself crypto. And I think, hopefully is teaching all of you something good. So what I'm going to talk about today, Preeti, should I introduce myself?
Yeah, please.
Okay, great. So I tweet and write a few things, invest a little, whatever. A quick background. Um, I used to actually note my education and educational background, but I think now universities are an obsolete technology, so I don't actually want to give them any more props. So I'll start from when I actually became a productive citizen. I started a genomics company, sold that for 375, became a partner at Anderson Horowitz. I helped boot up our crypto and bio funds, recruited Vijay Pandey to the organization. Investments are worth literally billions, so it's done pretty well. I was CTO of Coinbase, which you guys all know. And, I've got a new thing at 72trillion.com, like a little fun newsletter where we're talking about what the next step after crypto is, which is, if you start new companies, it's Google, and start new communities, it's Facebook, start new currencies, it's Bitcoin, Ethereum, start new cities, that's Prospera and Cul-de-sac. Starting new countries is what's next, right? And so I've got some articles and stuff on that. But of course, crypto is a foundation for that, just like tech was a kind of a foundation for crypto. All right, so without further ado, let me jump in. Second here. All right, so I'm going to project. So today what I'm going to talk about are open problems in crypto infrastructure. So one second. Shut down some stuff here. All the private keys are on screen. All right, just kidding. And you guys can ask questions in chat, and I will answer them if I can. Here we go. Let's present. All right, can you guys see the screen?
Yes.
Yep. Yes. All right. Okay. So today what I'm going to talk about are open problems in crypto infrastructure. So there's lots of sexy stuff out there, DeFi and decentralized media and DEXs and this blockchain scale. All that stuff is great. But what I'm interested in today is to kind of put a spotlight on things that are important and valuable, but falling through the cracks. This is sort of what I call the almost enterprise crypto or developer tools crypto stuff, where because it's sort of off people's radar, just a smart person who puts in some effort could make a big difference here. And each of these things, if you do a good job on it, I'm very interested in funding it. And you can just either DM me or @mention me, or there's an email address that I put at the end for people. Okay. All right. So without further ado, open problems in crypto infrastructure. So just as an overview, basically, requests for startups, like YC's requests for startups, they're like open problems in math, open problems in math or physics. These are things which, people just don't know how to solve them. It's kind of an analogy, right? And so we actually have a prize competition, 72trillion.com/inflation for something like this. And today's talk, as I mentioned, is on a series of such unsexy problems where funding is available if you solve them. So example, if you go to 72trillion.com/inflation, there's a $100,000 prize for a decentralized inflation dashboard. And the idea being that This is a global thing in Venezuela, in Argentina, and other countries. You've already seen censorship around inflation prices. So it's not like a theoretical problem. And so this is something that's best to build in advance of a serious issue should it arise. And this is the kind of thing that I'm going to go through. Now, as I go through these, one thing I want to clarify is there's a staging to them. Basically, as I talk about this stuff, if you're interested in any problem that I raise, you should first write a review, like what Jay Graeber did with decentralized social networks here. Then, maybe write some code, like a little demo. Okay. Then maybe build a microsite from that code, and finally do a startup. Okay. The reason is this gives you proof points along the way. It allows you to quit with something to show, right? Roughly speaking, like a 1 day, 1 week, multi-week, and multi-year, kind of thing, right? And, Jay Graeber's post here on decentralized social networks, I actually talked to her about this last year, and now she's running Blue Sky for Twitter, which is a great choice by them. She's really good, former Zcash dev. So these technical reviews travel much farther than you might think, and they show that you know your stuff. And it's just like a way, sort of an excuse for you to just write up what you know. And, if it's good, again, just DM me or mention me and I might RT it, okay? Might being the operative term because I get like 1,000 DMs a day or some ludicrous number, right? So you'll have to stand out. Please, only one DM a day, please. Otherwise, I might have to mute. All right. So this is a good way of start getting stopping points so that you don't try to do a startup right at the beginning. You can kind of test it out, trust the waters. All right. So with everything I'm doing here, don't think I'm saying do a startup. I'm saying start with a review, a technical review, and then go from there. All right. All right. So without further ado, open problems. Okay. So number one, very relevant, instant DAOification of a GitHub project, right? The first open problem is related to what we just talked about. So, let's say you went and did a GitHub project like this. Okay. Well, one thing that Nadia Eghbal and many others have observed, she wrote a whole book on this. She wrote a post on it in 2015 and then a book in 2020, is that open source is not monetized. Okay. And so there's all this stuff which is ridiculously valuable to the internet that everybody uses that nobody pays for. It's open source, right? And so one way of sort of tokenizing that in a generic way is this tweet that I had. And in general, by the way, if there's links that are relevant, I put them over here. And I'll probably just post these slides on Twitter afterwards. You can just type in the link yourself. There you go, right? That test of diligence. So this tweet basically is, a new way to fund open source. So the idea is issue a token, hold X% of it, award it over time to folks who contribute code, and then companies buy the token to prioritize bugs and features. So initially, your repository, nobody cares about it. Okay. But eventually, if it becomes like the Linux kernel, it's extremely important to be able to buy the time of Linux kernel developers to prioritize this or that feature. Okay. And there's a speculative market that comes in where people are sort of speculating what the price of that coin will be. So this alone, instantly DAOifying a GitHub project or tokenizing a GitHub project, is itself a very, very valuable thing. And what I would do is I would start with not just crypto people, but pieces of crypto infrastructure, like, a lot of the crypto tools call libraries that are non-crypto, obviously, right? So basically, many open source developers are sort of, have an antipathy towards monetization, but many others are like, wow, that'd be amazing. So expect to have a very wide range of reactions if you do try this, but I think this is a pretty important thing. And you can read Nadia's book, on open source software to get a sense of this. Open source is actually a lot like tech companies. There's often just like a single founder who just pulls through and is doing the whole thing uncompensated labor of love. And you might be able to make them millionaires or billionaires by just tokenizing it, right? Okay. So instant DAOification. The key is instant. Log in with GitHub, have a token. Maybe that's something where you have a GitHub convention where it's like version controlled on GitHub, or there's a GitHub action or something like that, right? Something where it's like, like BuildBot, it's easily shown on the GitHub page. Make it really, 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 really easy so that somebody on GitHub can just tokenize their project. Okay. Next one, Postchain. So today, every company is building random bridges between Postgres or their centralized database and these crypto projects, right? They end up reinventing the bridge because you've got state over here. For example, the debits and credits of Preeti remembers this. She did a ton of this at Coinbase, right?
Yes.
Yes. Every company does this. And, because you've got some off-chain ledger, you'll always have some off-chain ledger if you're doing anything crypto related. And then you have to synchronize that back to the on-chain ledger. And so what you end up doing, and then of course you're going to write a mini block explorer, and it's going to expand in scope until it's a full-fledged block explorer, because you need to query, who had what transaction when, and so this is something where everybody ends up rebuilding this bridge, especially for Bitcoin and Ethereum. And so the thing is, there's something called PostGIS that some of you may be familiar with, which basically takes the standard Postgres and extends it to be able to do latitude and longitude queries. So if you're at Uber or Airbnb, you want something like this. So you're not just doing a, discrete lookup of, what things did Jim buy today, but you're instead doing a continuous lookup of which cars are within a 300-foot radius of Jim or something like that, right? So lat long queries. And PostGIS basically solves this problem sort of once and for all. You still need to build code on top of it, but it defines these things, it puts them into low-level codes that they're performant, and it builds them into Postgres, right? We did something that's kind of allied called Rosetta at Coinbase, which is sort of like a generic interface for blockchains. And the idea is that taking these two concepts, can you make a post chain? Okay, like PostGIS, but for crypto. And again, you start this as a technical review and then do an open source project. If you look at these two bit.ly links down over here, one of them is actually by a Reddit thread I wrote, or a Twitter thread I wrote 6 years ago on this. Someone still hasn't done this, but this is like this would make you famous in the space if you made it work, if it was good. And what would that post chain have? Just like PostGIS has the concepts of latitude and longitude, just like it has like time zone database, so you don't need to like redo all that stuff. In the same way, a post chain, first just do it for Bitcoin, and that will give you like concepts like hashes, blocks, transactions, and so on and so forth, right? Then you extend it to Ethereum, and then you have, like you have a full wallet object with balances, not just UTXOs and what have you. And then you can figure out how generic to make it, and that's where this Rosetta stuff comes in, okay? Now, this is a big undertaking. You'd need to unit test the crap out of this. It's a multi-year project, but if you do the thing I mentioned with the instant DAOification, you might actually get that markup very quickly, because the speculative value of this is quite high, right? Okay. So post-chain, PostGIS, but for crypto. And again, this is like the plumbing, the infra that people ignore, but that's super valuable if you can get it right. Okay. Next, chain migration and interop. So, Blockstack, Binance, various coins, friends of mine have done chain migrations where, Blockstack actually like snapshotted on Namecoin and then moved to Bitcoin, right? And then they moved to their own thing. Binance snapshotted on ERC20 and then moved to their own thing. This is a very common thing. This is something which we need to build tooling for, where for example, a lot of centralized companies like a Reddit, for example, might want to take a Karma that they've had in a centralized database, snapshot it, and put it onto an ERC20 or put it on chain, right? So the interface between either a centralized database's Karma or points or something like that, or an ERC20 and its own chain, this is a whole thing, right? So can we systematize this? Can we build these kinds of bridges? And there's many different ways of skinning this particular cat. For example, you could have something where the Karma or the points were downloadable, so people could look at the ledger, and then you only added mining or verification or validation or staking or something in the future. So you could do it in stages. You could basically do progressive decentralization of a centralized database, right? Okay. So chain migration, so related to interop, okay? Because it's on a continuum. Putting the entire chain onto another chain is like the biggest step, but a subset of that would be putting, for example, loading some Bitcoin onto another chain, loading some Ethereum onto another chain. That's like atomic swaps or various kinds of interop stuff, right? So Thor chain and things like that are on this continuum. L2 is frankly on this continuum. Even off-chain is on this continuum, because you go and deposit funds on Coinbase, you move them around, then bring them back, as opposed to snapshotting the whole chain and putting it over there, right? So it's kind of as you write your technical review, you can kind of think of these things as all being within the same zoo of concepts and then figure out what you want to do. All right. And then related is, of course, chain mirroring, like something like USDC is existing on multiple chains at the same time. Okay. Next, quantifying and then optimizing decentralization. So today, how do we talk about decentralization? Well, people yell at each other on Twitter. Yeah, my coin is more decentralized than yours. Or, the government gives these extremely vague things, something is sufficiently decentralized, right? Now, actually, 5 years ago, I wrote a paper called Quantifying Decentralization with a friend of mine, Leland Lee, on measuring blockchain decentralization. And I defined a coefficient there, which I called, the Nakamoto coefficient. And it's actually very simple. The intuition is, if you had a system where there were, let's say, 3 exchanges and, 200 miners and 1,000 developers, well, the most centralized choke point are the three exchanges, and you could just choke that off, and the system would be de facto centralized, right? So essentially, it's basically saying what's the minimum choke point among all the various subsystems. And then you might argue there's different thresholds. You might need to capture all the exchanges to shut it down, but only 51% of the miners. And so you could define individual thresholds there. But conceptually, the question is, how many entities do you need to compromise the system? Okay. Now, the key thing is this is a number. You can actually measure it, right? You can put it on a dashboard. In fact, Solana, which is, as you guys may know, it's a multi-billion-dollar chain, an Ethereum competitor that's doing quite well. Learn all of Preeti's Ethereum stuff before you learn Solana, but Solana is pretty good. So Solana actually optimizes the Nakamoto coefficient, actually is thinking about that. And the thing is, the reason you need to measure things is only after you measure them can you optimize them. Okay. So once you can measure the speed of a car or measure the speed of something in a wind tunnel, then you can start saying, okay, given scarce resources, let's streamline this, let's move that, et cetera. And then we optimize the speed, right? So that's the whole discipline of constrained optimization. For all those people here who know math, on the right-hand side, there's an entire field of, constrained optimization where you're minimizing an objective function, objective, not in the sense of, disinterested, but objective in the sense of goal. So you minimize an objective function subject to an inequality constraint, and then maybe some sort of, vector inequality over here, right? And, that may seem arcane, but the point is once you can measure decentralization, you can optimize it given a scarce budget. Of that $1 million, how much goes into developers or exchanges or miners? You don't know unless you've got a metric to say, this would make the system more decentralized versus this. If you understand, okay? So quantifying decentralization allows us to optimize it. This is a big deal. You can make dashboards for it. You can help with this, right? Okay. Another concept, the coin table and the cap table. So right now, there's lots of companies that have cap tables, like traditional companies, and then there's more and more companies that are issuing coins, digital assets of some kind, sometimes NFTs, which are non-fungible, of course, and sometimes other kinds of digital assets. And those are managed through Coinbase or other exchanges, right? What we really want is a combined web dashboard for these, perhaps using APIs where you can see all your investments in one place. And I actually have a tweet on this, which this is part of something I'm calling the DeFi matrix, which is basically the all versus all, every asset versus every asset, all of your fiat assets, all of your crypto assets, your NFTs, et cetera, are all sit in a wallet and they're all liquid against everything else. And that's the DeFi matrix. It's like the sequel to the social graph. The social graph defined the 2010s. The DeFi matrix defines the 2020s. I've got an article on this coming out. But one big piece of the DeFi matrix, for example, is just fiat to crypto trading, like buy Bitcoin with cash. Another is crypto to crypto trading, which is like buy, Ethereum with Bitcoin or exchange tokens. Another is like cap tables, like fiat equity for crypto equity and so on, right? So this dashboard would basically help every investor because you just give them a visual on their entire net worth across everything, okay? So you have a very well-heeled clientele. If you could somehow fuse without replicating it, Carta and AngelList with Coinbase and those things, like even the simplest thing of just like a side-by-side view that pulls everything together could be pretty good, right? Okay. And VCs would probably try this out. And one thing, by the way, is, there's some companies like Relate IQ, which because they were highly visible to VCs, sold for very large amounts of money with a very low customer base because everybody who could write a check knew who they were, right? So it's like, if your first 100 customers are somebody and they're all millionaires or billionaires, it's actually a pretty good initial customer base because they could basically spend money to save time. Right. By contrast, the worst kind of customer is like, what I used to be like an academic, because an academic has no money and tons of time. Right. So academics are the worst customers. VCs are like the best customers in some ways. Okay. Or CEOs. All right. Next concept, automated accounting, triple entry bookkeeping, and streaming financials. All right. So it's insane how manual the process of accounting still is. At the bottom, this is the concept of triple entry bookkeeping, where it's not just that there's a debit and there's a credit. There's an impartial observer, namely the blockchain, that is observing all of those debits and credits. And with USDC, more and more businesses can kind of run on this. Okay. So, it's still too early for the entire crypto economy to run on this. What you can do is you can set up toy examples of a company that would set up on chain, book a bunch of USDC transactions back and forth, generate its general ledger and your chart of accounts, and then generate real-time financial statements, your income statement, your balance sheet, your cash flow, and then you'd even fill in whatever tax return forms are required for your respective country. Okay. If you did this, I would give you an enormous embrace over the computer screen, because this is so important. It's so insanely important. Accounting is not boring. Accounting in some ways is the most important dashboard in a company. And right now it's still something where you have to sort of push the accountants to close the books on a monthly basis and whatnot. All of that should be fully automated. Basically, it should be like a trigger. Every single time there's like somebody who subscribes to the website, okay, boom, that is put into the general ledger and the chart accounts, and it automatically updates, your various, in that case, it's not a liability. It's actually, well, depending on where you book it, it could be an asset. And, then you update all your financial statements, and you actually update the cell in your tax returns or what have you. So everything is just all hooked together. What I just described is totally possible with USDC because all dollars are on chain. Right. So you can pull the history of every transaction, every timestamp, every entity it was sent to, you pull the type of the entity. And to be clear, the V1 of this that I'm suggesting is a toy version where you set up the entities, right? You basically are like, okay, here is, Stacy's lemonade stand. She sets it up. She sells 1,000 lemonades. Here's like 1,000 economic actors. You could do this on testnet if you wanted, right? But the point is to just show that the economy can go on chain, and you can automatically generate stuff that requires all of these accountants and lawyers to go and generate, right? Now, just showing this as an example, this would be a super viral blog post that I could probably get to like all these governments, right? Dominic Cummings, I'm not sure, some people like him, some people don't. But he RT'd me on this, basically saying that a bunch of governments are not aware of how much this could help in terms of, automating accounting. And that's something that's a nonpartisan thing where if you're interested in making the case for crypto, this shows operational efficiencies that are indisputable, right? Because you're simply being able to do something better that everybody agrees is important, namely getting audited financials. And who's auditing it? The blockchain, effectively, right? This also, by the way, is a huge incentive to go onto USDC or onto a stablecoin for everything, for the same reason that you want someone to use Google Docs rather than a Word document, because you get collaboration and so on. Why do I want USDC? Well, because it automatically incorporates into my financials if you use it as well. Oh, and it's good for you too, because it gets into your financials as well. That whole part of all of your stuff, it's a network effect where the more people who use that, the better and more automated things are. It's like compliance as a service, right? So this is a very big deal. It's actually not that hard. And if you just did a blog post on it, like the V1 of it would probably take you a weekend for a simple company. You just go and take an accounting 101 textbook, do their toy company. First do it like centralized with like a centralized script where you set it up and tear it down, and then make the corresponding entities on chain. And Preeti has taught you everything you need to know. You don't even need to know any really fancy smart contract stuff, just the simple stuff. Okay. Next, relatedly, putting Sandhill on chain. So a huge issue in crypto is the lack of traditional forms of economic alignment, right? So people will basically, who's seen the Bogdanov meme? Nobody? No one's seen the Bog? Preeti, you're not teaching them the memes? Have you showed them the Bogdanov meme?
No, I have not.
Pump it, dump it? No? Okay, all right. Well, Bogdanov, basically, essentially what a lot of people do is they, Bogdanovs are these guys, like French guys who've had like crazy plastic surgery and look like, cartoon villains or something. And there's this meme where there's this poor guy who's trying to trade crypto, and Bogdanov is calling into a phone and torturing him. As soon as he sells, the price shoots up. As soon as he buys, the price shoots down. Okay, he's like being tortured from afar, right? Okay. So a lot of people essentially believe that there's centralized actors that are pulling the strings on markets and what have you. And every time the price goes up or down, they're like, did so-and-so sell? Did so-and-so sell? They don't want it to believe it's a distributed action. There isn't trust because it's a international system. Why would some person in Brazil trust a person in Japan they've never met? Okay. Answer: in VC, we actually have solutions for this, right? Sandhill is not all bad by any means. Essentially, every train crash, every economic accident that's happened has led to a new term that was put into the contract to look for that particular circumstance and agree on it in advance if it occurs. For example, liquidation waterfall, drag along, lockups, vesting, every single one of those things, there is some dispute that happened as to who got what money when. And as a resolution of that dispute, people put it into the contract up front so that in the event these two people disagree, this is the procedure, and here's who gets the money first and here's who does not, right? It's like, preferences in the preference stack, all this type of stuff. I won't be able to explain all of these terms to you right now. What I will say is there's a good post, carta.com blog, The Life of a Cap Table, which you should go through. You should do all of these calculations first in a spreadsheet, then do it in Python, and then write a blog post where you put it on chain. Okay. So very similar to the previous one. In the previous one, you're kind of simulating a company getting revenue and then doing it streaming financials. In this one, you're kind of doing the other step, which is like the setup of the company. It accepts a round of financing, it issues shares, and then it's torn down. And you're just modeling all of this on chain, where you've got a cap table on chain, you have the investment rounds on chain, you have the Series A, B, C, D investors, you have, maybe there's warrants. You basically make it more and more sophisticated. And what I would do is do it Flowers for Algernon style, right? Who here has read Flowers for Algernon?
You went, we can't hear you right now.
You can't hear me?
Okay, now we can.
Oh, did I cut out completely or just for a second?
It was just like one sentence.
Okay. So who here has read the book Flowers for Algernon?
I love that book.
All right. It's a great book. Okay. So Flowers for Algernon, the person starts out mentally incapacitated and then becomes a genius by the middle. We shall skip over the end where he becomes not a genius. So your blog post could be written as a series of blog posts where you start with the simplest possible thing. It's like a Delaware C Corp that takes one round of financing from one investor, and then it exits for like 2x, and then what the liquidation waterfall is, and then who gets the money, right? And all the addresses that get paid out. And then you do 2 rounds of investment, and then you do 3 rounds of investment, and then you do like vesting, and then you do, like a dispute where there's a board vote, and so on and so forth. All those things are like, like a DAO, right? Like who votes on what. And basically by just, and then at the end you get to, you might, by exercise number 100, you do Facebook's IPO. Okay. Where it's because a public company, it has the proxies that Zuckerberg had at the time of IPO. It has the exact shares. It has all of the scars that a real company kind of has by the time it like staggers into IPO. It's like, those guys who have eye patches on and so on. The cap table has all these scars, right? So you do like a real concrete example with all kinds of crazy stuff by the end, and just building up those 100 problems would each be like folders in a GitHub repo, and then you put them on chain. And these two, putting Sandhill on chain and automating accounting, would be blockbuster. If anybody here does these, if you can do these technical reviews, they're really not that hard, just requiring time and reading, right? Anybody who can do Preeti's class, Preeti could do it. I'm sure some of our students can do it if you're Preeti students. This is not that hard. It just means reading the details of these terms. And if you do a little bit, I'll take a look, right? Again, read this blog post on the Life of Cap Table will give you more, right? Okay. All right. So next, a pluggable dashboard of dashboards. So one of the things about crypto is there's all these on-chain metrics, right? Based all this data that you can pull into dashboards. There's a wealth of dashboards. What I want is a Yahoo style index of dashboards where I can drag and drop in widgets, the meta dashboard. Okay. So, the simplest would just be stupid iframes. Okay. And that's actually better than nothing, like a Pinterest style layout of CoinMarketCap and DeFi Pulse. And because there's so many of them that I feel I'm not looking at good ones. I want to see all the good dashboards on Solana. I want to see all the good dashboards on Compound. I want to see, which ones are pay and which ones are free. Can you create a Yahoo style index of them, indexed by coin, by open sourcedness, and maybe other variables? Not that hard to do, but I think this would be a very popular site and you'd probably learn a lot. Okay. Next, user aligned metrics. So as you guys know, clickbait and the advent of what the internet did is it allowed individual articles to have metrics on them. We take that for granted in 2021, but that was a huge breakthrough in the 90s. And what it led to is, places like BuzzFeed publishing articles like, don't worry about coronavirus, worry about the flu. This article, they took down their view count, but it got like 10 million views. They were like patient zero of this stuff in the US like early last year. And so then they changed the headlines, stealth edited it later. And the reason for this is they can see, they literally have A/B testing on their clickbait. At the top is Google Analytics. You can add annotations and you can see, hey, here's an email newsletter blast, and boom, it rocketed up in terms of my subscriptions. You can sort of see cause and effect over there, right? Now, what this is basically with the internet, every outlet can see how much traffic they're getting, how much money they're making. But with crypto, what's interesting is you can see how much money you're making users. Not just how much money you're making, but how much money you're making users. If they opt in to link their wallets to you, with some privacy guarantees, you can actually see how their portfolio is doing should they decide to disclose it. And so you can now judge content in a totally different way, not whether it gains traffic for BuzzFeed, but whether it makes money for you. Like the ideal is something where there's some metric, your portfolio, for example, you view some content and then it goes vertical. Okay, this is a very, it's like a simple concept, but a very deep concept because we couldn't do it until crypto because you couldn't get provable user aligned metrics, right? And so you can quantify the benefit. One way of thinking about it is Bloomberg, all this content is supposed to make you a better investor. If I read it, did I make more money after or not? Right? And then you can eventually, so you start with finance, basically you could put this, just like Google Analytics, it's got like email newsletter blast and went vertical over here. Coin Tracker, what you want to do is like attribute, and you say, I read this article, I bought this coin, therefore I made more money. Thank you, Coin Tracker, for example, right? Just the concept here of user aligned metrics is crazy because of how different it is than the entire Web 2.0 era, which has been optimized around sucking as much time as possible. Right? Netflix, the CEO actually famously said something like, Netflix is competing with, taking your wife out for a glass of wine and a dinner where you're making you zombies or whatever on the couch. It was like a frank, admission, but the point was to turn you into a zombie that's just staring at the screen and clicking and giving ads. And it's actually negative sum for both sides in a sense, because advertising is an extremely inefficient way to get money from somebody. You'd rather than have them watch for 3 hours and click one ad and give them 10 cents. They'd rather you do something in 1 minute and generate $10 with your skills and get $1 out, right? So user aligned metrics, I think, are an extraordinarily powerful thing, which we're still fully getting our heads around, but you could generalize them also outside of just portfolio performance to, for example, fitness. If this metric is not portfolio, but like muscle mass, what does men's health look like in the time of Fitbit? Rather than just putting cover articles with like 6-packs or whatever, it actually helps you get a 6-pack, right? So you can actually start grading content by individual benefit, okay? This is a total shift from the Web 2.0 era. It's user aligned. I think it's a big deal. I think you'd start with the financial stuff, the portfolio stuff, because we're ready for that. And then you can generalize to other things, right? Okay. Next concept, principal agent. So the principal agent problem is a very deep problem, but the basic idea is when you hire somebody to do something, their interest may diverge from yours. Okay. And that may mean that they do what is in their interest rather than your interest. Okay. So, simple example, you hire a lawyer to draft some documents and you want it done today. And what they want to do is they want to surf the web. Okay, that was in their interest, not your interest. Okay, but more generally, basically, the principal agent problem is a very deep problem that occurs because just two entities can have, 4 relationships. They can be win-win, win-lose, lose-win, or lose-lose. Right? Every relationship between two parties has those 4 outcomes, and in an org chart, you have every edge there has those 4 outcomes on it. It could be a win-win, win-lose, lose-win, or lose-lose relationship. Okay. Now, equity, what it does is it tries to push everybody to the win-win corner. But every time you delegate something, there's a possibility that there's a win-lose on their side, and they are skeptical that it might be a lose-win where they lose and you win, right? And if both parties are suspicious, you can get to a lose-lose. Okay. So I've thought about this a lot. And one thing that's kind of interesting in the context of DAOs is that you can start defining the edges in an org chart computationally. For example, the powers an executive has could be defined in terms of an access control list. You can hire this many people, you can fire these people, you can revoke these permissions, you can add these permissions. And now essentially what an executive has is edit privileges over a subtree. Okay. The point being that a DAO doesn't have to be some higgledy-piggledy, thing of everybody milling around. You can actually have arbitrary topology for DAOs. It does not need to be just a social graph. It can be a social tree with an actual CEO and hierarchical structure. There's the point being that centralization is a tool, just like decentralization is a tool. One thing that Mark Anderson's colleague once said is that the only 2 ways to make money in business are unbundling and bundling, right? So with MP3s, for example, we unbundled all the songs out of albums and we rebundled them into playlists, right? With social media, we unbundled all the articles out of newspapers and we rebundled them into Twitter feeds. Yeah. With, many other kinds of things where you do Pinterest, for example, you unbundle all the catalogs and you rebundle them in Pinterest dashboards or whatever, right? And so that's like decentralization and then re-centralization. You take all the pointers away from the banks, and then you re-centralize them in opt-in exchanges or other kinds of things, right? We're rebuilding these things. So there's nothing wrong with decentralization, nothing wrong with re-centralization, so long as there's consent in the process. That, yes, the process of going from CDs to songs to playlists was unbundling and rebundling, but playlists are better. They're more flexible. There's other kinds of things. And of course, you can just click and just get the same, de facto playlist or default playlist from the CD. What's my point? Point is, once you kind of get your head past that, where decentralization is a tool, centralization is a tool, and what matters is the outcome, you start thinking about access controls for DAOs. You can start solving aspects of the principal agent problem where some aspects are delegated to the person, some aspects are delegated to the smart contract, and the scope of duties is highly enumerated. Okay. And all this is possible because the org chart is also on chain. Again, this is related to the general thrust of these open problems. We're putting pieces of the corporation on chain. I talked earlier about, putting the cap table in Sandhill on chain and putting the accounting on chain. Here we are putting the org chart on chain. Okay. All right. Next concept. Pure CPA for crypto commerce. So this is how to destroy Google and Facebook. Everyone's interested? All right, good. So, look, they're great companies. They've done a lot of good stuff. They've also done a lot of evil stuff, especially Google recently. And CPM and CPC are basically how they make their money, right? These are gigantic advertising entities. CPM is, every 1,000 views, they get some money. CPC, every time you click, they make some money. Now, the thing is, as a merchant, what you would prefer is full CPA. Your Casper mattress, you only want to pay Google or Facebook when you actually sell a mattress. But for lots of different reasons, full CPA, Google and Facebook don't do it because there's an incentive for Casper to understate the number of mattresses it actually sells. And then conversely, for Google or Facebook to overstate how many it sells, the actual determination of whether, a click actually led to a sale would require some impartial third-party incorruptible entity for both to trust that would log every transaction, which is a blockchain. So you can do a toy example here as well, right? Where you take that same concept, triple entry bookkeeping, and you apply it to implement full CPA advertising. Again, this thing, you could probably do a demo of it on a blog post in a weekend, but this is like the stick of dynamite that can blow up $2 trillion companies. Okay, because full CPA is way better for merchants and gives them a strong incentive to move to full crypto, just like having full accounting gets you full crypto. The triple entry aspect, because it automates all this bookkeeping, is actually a much, much bigger deal than people think. And so we went from like Bitcoin to stable coins to automated accounting and so on. Essentially what we're doing is, once you have transactions on chain, you have higher order data structures from the transactions on chain, like your financial statements, like your advertising attribution, like your cap table, and so on and so forth, right? Okay. Next concept, and I'm almost done. The blockchain L2 performance shootout. Okay. So right now, how do people argue about blockchain or L2 or L1 performance? They yell at each other on Twitter. It's a great way to settle disputes. I love it so much. Okay. But in the event that that does not fully satisfy you, there's a great thing called the computer language benchmarks game. Okay. Where all of the benchmarks are on GitHub, and it's phrased in such a way that, basically, it doesn't take itself too seriously, right? It says, look, you can write whatever benchmark for whatever program, go knock yourself out. But it's also true that in the totality of the benchmarks, you'd find that Rust tends to be faster than Python, which tends to be faster than Visual Basic or whatever, right? And so the exact same thing should be applied for blockchains. I want to see for Bitcoin, for Ethereum, for other chains, programs to download the full thing, download just headers only, to send and receive transactions, to set up Lightning channels or L2. All of these things should be benchmarks. And then what you can do is you can have partisans of different coins submit pull requests, and they'll immediately say, no, you didn't set it up right. You need to use turbo geth, not geth to sync. That's like 10x better. And you'll learn as you do this. Okay. But this thing alone would basically be like the cross crypto Rumble. And I think it'd be a very popular site, and I'd be happy to fund it if you guys someone can get a V1 up that shows good energy. Okay. Last one. So we have login widgets, for Facebook, Twitter, Google, et cetera. I want to see the equivalent. You can already log in with Ethereum to Uniswap back when it was up, like matoken.eth. I want to see the equivalent of this for like ENS, HNS, Urbit, BitClout, the new decentralized IDs, right? Very simple concept. Should exist, should be like a very simple bit of code. And now we're moving from passwords to private keys, right? From these guys being able to throttle and choke off your account to actually having data local. This is just simple stuff that I'm talking about here. All the things I've talked about are simple, but they're filling those gaps. It's not the sexy stuff, but it's the valuable stuff that a lot of people will use, a lot of people thank you for, and frankly, that someone who's graduated Preeti's class will be able to do. So that's it. So you can email us. Actually, just use support@29.com. No, 29.com. And if you, building these, email us and we may fund them. And I will take questions now.
Awesome. That was a full gamut of ideas. A lot of what we focused on was DeFi and NFTs. This definitely gives the other side of the story too. Zarif, go first. Question.
First of all, thanks for that. That's, I think, I probably say for the rest, that's got me super inspired already. You spoke a lot about some of the opportunities that lie. I was wondering if you had thoughts on why some of these ideas are not being implemented, and I'll touch on a couple which I think are fascinating. One is the inflation dashboard, the global inflation dashboard, and the second is the accounting. I'm an accountant by background. I know some of the reasons why it may not, but I'm keen to hear your thoughts on why it's not happening and what, I guess, some of the bottlenecks are that we need to think about when we're designing these things.
Well, I mean, some of these are things where you need to kind of know about a few domains to put them together, right? So you need to know both accounting and crypto to be able to do the streaming accounting. You need to know about both VC and crypto to put cap tables on chain. You need to know about like being a CEO and having an org chart to put org charts on chain and articulate the problems in such a way, right? So, these are actually things like, if Preeti remembers, I've been thinking about these things for years and years, but now I think the community is large enough maybe, and USDC is there. Why do I say USDC in particular? Because it's just like on-chain dollars, right? So you don't even have to worry about Bitcoin volatility. The adoption is now out of sight. Stablecoins are here to stay. Like, whether it'll be CBDCs or stablecoins, we bless the CBDCs are going to be here. So showing the use cases for them, those three things, right? Automated accounting, on-chain org charts, and like computational cap tables, right? Like those three things, that's like putting the company on chain. And the Wyoming governor would love to see that. With the Wyoming DAO law, that would instantly help, like make the case for this, right? I think those posts could be way more influential than people think, but it's just kind of being in the right place at the right time and knowing enough different domains. That's my thesis on it.
Cool. Thanks.
Awesome. Joshua?
Hey, great presentation. So my question is, to what extent do you think the steepness of the power law will be when we're talking about like the popularity of each blockchain? Meaning, like, are we going to have like a few big winners and then this giant long tail of like niche blockchains, or do you think it'll be some other distribution?
So I think there's going to be, I think there's going to be an enormous number of, basically every asset becomes a digital asset, right? Bitcoin is digital gold. Ethereum is for, let's call it, not necessarily state resistant, but maybe partially state resistant, but like your corporation would be on Ethereum, your digital corporation, your, maybe your NFT. A lot of these things would move to other chains because Ethereum is going to, like, the highest value transactions will happen on Ethereum. Your M&A for your $1 billion digital company will happen on Ethereum, but your video game item might not be hosted there because, its throughput might not be enough, And so I think what you're going to see is, and of course people will say, oh, Ethereum can scale, and we'll see. It is doing it somewhat with Polygon and other things. So what do I think about this? I think it's sort of both. I think it's like the internet, right? Obviously there's Google and there's Facebook and there's Twitter, these absolutely gigantic things, but there's also all of these micro websites and whatnot, right? It's going to be like that. If you deal with information, you need the internet. If you deal with money, you need blockchains. And the way to think about it, for me at least, is every stock goes on chain, every bond, every loan, every derivative, every financial statement, every cap table, every org chart, every marriage, birth, death certificate, every passport. All of these kinds of things go on chain in different ways, right? Eventually the keys to your car, basically property rights. It's essentially a state as a service, like John Locke's whole theory of, the state's legitimacy, the monopoly on violence comes to this. Like essentially encryption is a different way of doing that. Like essentially the blockchains provide many governmental services in the sense of the debit and credit, like the property rights, the education, the rule of law, dispute resolution, all of those kinds of things, right? Identity, even, like your driver's license type stuff. So I think it's going to be massive, but I also think that, digital gold will probably be one of the biggest, if not always the biggest. And the reason for that is, gold used to be the thing, if like medieval history or like pre-modern history, gold used to be the thing that every empire cared about. It constrained states, they were all fighting over it. Gold was like the big thing. If you have gold at the center of the global economy in the modern world, it's like 100x what gold is. So like when people talk about like the gold market of 2 trillion or something, being like where Bitcoin gets you, actually, no, it'll be way more than that, because if gold is the center of the modern economy, it's like humongous, right? So, in a sense, you can't go wrong by just like buying and holding Bitcoin. I don't think you can go wrong by buying and holding Ethereum either. But I think like, so long as you're in crypto on a reasonably good project, like the way to lose is to sell or to abandon the space. And to have weekends or whatever, so to speak. But you don't want to be a trader, right? You want to have conviction in something, buy and then hold, forever. So that's maybe a long-winded way of saying both. There's going to be some coins that absolutely dominate. There are many trillions of dollars that are global kinds of things. There's also going to be assets for every kind of purpose on the face of the earth.
Thank you.
So Akash.
Thanks, Balaji, for the lecture. I wanted to ask, because I know you have started the genomics company and you've written a lot about the dire importance of longevity and solving aging. What do you see as the big, perhaps unsexy problems within medicine and healthcare that crypto can really put a dent in?
It's a good question. I think that it's a little early to do crypto. Basically, if you mix two hard problems, you get an impossible problem, right? And so it's kind of like, that's why you sort of had to see Twitter and Facebook and Google before you saw Uber and Airbnb, like there's always exceptions. Like Musk did SpaceX very early. He just set the difficulty level at 15, early on. But in general, just being able to use, like solve the digital problem first before you solve digital plus physical, right? So crypto alone, I think, has to mature a little bit more, because if you do crypto plus bio, you stack two regulatory risks on top of each other, right? With that said, if you really want to get into the space, I think the most interesting things out there are the things that are sort of routing around the FDA. And like Sweatcoin, for example, I think is very interesting. It's like, not so much that like I would buy the coin or anything like that. Don't, assume I'm not endorsing any coin. Also assume I have a stake in every coin. Okay. So I'm not like endorsing anything. But Sweatcoin is interesting simply because micro incentives make people do things more than you might think. And micro incentives for fitness are pretty interesting. Micro incentives for health are interesting. And it's like a fairly popular app, despite seeming extremely stupid. At least seems stupid to me. It seemed like Dentacoin or whatever, but you never know. These are fruit fly experiments and some of them work. And so that's the area I would look at, is like proof of workout, proof of health type stuff. I'm very interested in this. It's related to the user aligned metrics thing, like what kinds of stimuli make people more jacked versus what kinds of stimuli. I don't know if you saw my thing on this, like the YouTube algorithm is the origin of Soylent Grin. Okay. I won't make the face, but there's a YouTube face where people are like extremely shocked looking, and that evidently gets more clicks on YouTube. And this has translated into the real world where people make that expression even without realizing that the algorithm is sort of programmed that to make that expression, because it shows them faces of people doing this all the time since other people click on it, right? It's partly algorithm, partly a collective thing. So what I'm interested in is, can we use crypto to be conscious about producing results that are the reverse? Some of the proof of health, proof of workout stuff, like Sweatcoin 2.0, like an Apple Health based on Fitbit. So you're not going after the hardcore diagnostics directly, right? You're doing an end run around it. In the same way that Google didn't try and get TV licenses, right? They built streaming and Google Video, and then they acquired YouTube. And they still, to this day, to my knowledge, don't actually have TV licenses in different countries, but it actually turned out to be easier for them to go completely around and ship you like a Google TV dongle than to go down, the old path, right? Same with Apple. Apple doesn't actually own NBC or something. It went all the way around, right? So I think with crypto, we can figure out ways to go all the way around health. The other thing I'm looking at, there's stuff like longevity DAO stuff and so on. There's a talk I gave at Chainlink. Maybe I can paste it. And maybe Preeti, you can find it. Like there's a Chainlink Today article on my talk on the ledger of record, which is how you use crypto to go after science. And fundamentally, you put not just the paper out there, but you put the paper and the data and the code on chain. So you're starting with fundamentals. You're starting with the facts for biomedicine, right? And you're also starting with a different thing, which is like workouts. And then from those, you have sort of a flanking attack where you start with like the extreme casuals, people who are working out and getting Sweatcoin. And then the folks who are extreme elites at Harvard and Stanford who are starting to put their papers on chain. And eventually in 5 or 10 or whatever years, you flank and you start meeting the center and you go after more health related things. That's a broader thing. And I can talk about more, but that's where I'd go with that.
That's a really good answer. Pranjal?
Yeah, thank you, Balaji, for your presentation. Really intriguing ideas. So questions about those ideas only, like 2 questions. You said that we can do on-chain cap table. I work for a startup and they're really not transparent about what like cap table looks like. Why do you think that they will be like, they want to do this like on the chain, like so that it will, that's the first question. And the second
so
is,
do you know what viewing keys are?
No.
So you can do, so Zcash and Monero have this concept where you can selectively disclose things on chain, right? So you don't disclose to everybody. It doesn't have to be public or private. It can be intermediate. So that's my short answer, is you would set up the encryption scheme in such a way that a subset of people have access to it, but not everybody.
And what's why to do it on the chain? Like why can't just the traditional method works?
Because if you have it in Excel, right? So do you know the company Carta.com?
Yeah, we use Carta. Yeah.
Yeah. So why do you use Carta? Because it's a third party that has a nice interface and that has seen many, many cap tables, and it has little widgets and stuff so you don't screw it up, right? In many ways, the cap table is like the most important data structure in a company, because it's the $1 billion data structure, right? And so what used to happen, but still happens in many ways, is people manage those cap tables in Excel and their math is wrong, or they forgot somebody, or someone didn't get a share certificate. And then they have to clean all that up at the time of an acquisition, which is a very high stress thing. And if something was wrong, they could screw it up, right? Now, Carta is fine, but the next step is actually on chain, because then every user actually has private keys. They don't need Carta to move the funds around. They don't need Carta to merge accounts. Basically, they have user control for the same reason that you hold coins. Basically, every security becomes a digital security, I think, over time. Now, you can still have custodial entities like Coinbase, but like Coinbase and Carta kind of merge over time, I think.
Okay, makes sense. And the second one was the last one, the pure CPA for crypto commerce. Like people go on Google and Facebook for a reason, because they can search and then to connect on Facebook, like social networks. And
Right.
that's why they can show the ads and stuff, right? So how would you actually disrupt Google and Facebook? And do you create your own networks? Or are you thinking more of like a carbon thing? Like how do you serve that advertisement and how do you relate it to like the pure CPA? How would you do that?
Well, so you're asking a good question, which is how do you get the distribution? Because Google got it through search and Facebook got it through social, right? And
Yeah.
my answer is, once you've proved that subroutine out, that CPA advertising works, well, crypto exchanges are pretty big and they have a lot of people who hold crypto. So crypto exchanges could get their merchants to do this and then do CPA advertising where they run CPA ads in the feed, and ta-da, there you go. That's your distribution.
Thank you.
They're not as big as Google and Facebook, but they're not small.
Makes sense. Thank you.
Awesome. Sri Lakshmi?
Hey, Balaji, thank you for the awesome presentation and sharing of all your ideas. I had this question around, right, in the current world, we have so much concerns with privacy. And in spite of that, we have companies like Google, which is exposing all their data. and people are still using both the kind of technologies, Google as well as Apple. Apple is the one where they closed everything. Like there's no, you have no privacy concerns with Apple. And
I don't know about that. They just recently did the thing where they're running a program locally on your machine. There's some actually very serious privacy issues. Look at Snowden's Twitter feed with Apple. But go ahead. I understand your point.
Got it. So, but when you come to the crypto world, everything is going to be decentralized, and privacy concerns are going to be addressed, right? I mean, it's going to go in that.
I think we have a shot. We have a shot at it. The future is uncertain, right? You can influence the future. One person can make a difference. Satoshi made a difference, and the reason I say that, by the way, is, with Newton and Leibniz, calculus was like independently invented, right? Around the same time. But to my knowledge, nobody around the time of Satoshi was doing anything like Bitcoin. It wasn't like there were two things that were Bitcoin-like coming out at the same time. So one person really did make a difference. They changed the future, I think. And we're all basically here because of Satoshi. And, so the thing is that I think crypto gives us a chance at a privacy preserving future, but both China and the US kind of controlled tech companies are moving in a very dystopian direction. And the thing about crypto is it allows you to do both super transparent or super private or some intermediate thereof, right? You can have Zcash and you can have like USDC, and like you can have both, right? Just like the web pulls you to extremes. You can have, the 30-second clip, or you can have the 30-episode Netflix binge, right? So crypto is both. And I think in some cases, the transparency is actually very good. There's a term called surveillance, which is surveillance from below, right? Meaning you might want, for example, all government officials for us to be able to surveil them, but us to all be private. And I think that's something, by the way, that we should sort of lobby for is, there's Larry Page's saying, which is 10x is easier than 10%, right? So if you just kind of edit around the current status quo and you're like, oh, I only want to KYC those people who are at this threshold, that threshold. Look, comply with all applicable laws. I'm not saying don't do that, but also advocate for the law to be completely changed. And what I mean by that is we should have privacy over KYC. Why? Because all the data that every exchange and every, not just exchange, but other outlet is forced to collect on you is pushed to these government agencies that are constantly getting hacked. And I mean, getting owned left and right. They don't even know where the data is going. It's just streaming out there. China has it. OPM has gotten hacked. They can't even protect like the data of government employees, right? So those hacks will lead to violent attacks. Okay. And so any possible benefit of them KYCing people, it's essentially to prevent crime, money laundering, et cetera. Well, if they're getting owned on such a level, such that your data is basically just being posted on the internet and they can't protect it. So we should lobby for privacy over KYC because they cannot collect what they cannot secure. They should not collect what they cannot secure. Now, let me get off my soapbox, but that I think is a very important concept where we're putting the ball on their 100-yard line, right? We just completely reject the premise. And that's what Bitcoin was. It rejected the premise, right? It rejected the premise that the currency has to be inflated, right? It rejected the premise that you can't custody your own keys. It rejected the premise that monetary policy has to be set in the back room. It rejected the premise that, courts have to interpret contracts versus code and so on and so forth. It just rejected a bunch of fundamental premises. And by rejecting those premises and putting the ball on the 100-yard line, and, it's like that Captain America cartoon, like, no, you move, right? By putting the ball on the 100-yard line on the other guy's goal line, that's actually what really changes things, So have the courage, if you need to reject the premise and do the complete opposite of what they're saying and be able to morally and ethically justify that. Okay, I know it's a lengthier answer to your question than you asked for, but
yeah, and then obviously, like to that, I had the question of like how would it evolve in the future, and do you see like this progression happening like in the next decade, or what?
We need to build a crypto phone. We need to. The good thing is there's a lot of energy for that. Because you need to have a phone. Like basically what I predict is going to happen, this is a little dystopian sounding, but here it goes since you asked, since you're talking future predictions, right? The future, like you should, not every country is like this, but at least in the West, I think one should prepare for the apocalypse, but with internet, sort of like COVID, right? COVID was like the apocalypse with the internet for a few months, right? Where everybody's indoors and, the internet worked, but a lot of other things did not, right? And what I mean by that is, I think, the people in the late 1800s were not prepared for total war, right? Total war meant, things that previously weren't militarized were militarized, like civilians were bombed, all kinds of crazy stuff happened, right? Like crazy doesn't even begin to capture it. Like people had this bucolic agrarian existence, and they went from, outhouses to indoor plumbing, and then also overhead bombing. It was like this crazy, surge of modernity. And when you think about the progression over our lifetimes from rotary telephones to what we have now, it's actually comparable, I think, in some ways. Like the rhythms of daily life are completely different than they were in 1990 pre-internet, not pre-internet, but let's say pre-commercial internet. And so one of the things I anticipate is going to happen this decade, to your point, maybe this decade, maybe next, but soon, is not total war, but total cyber war. Meaning every aspect of the internet, which, people used to say the internet's an untrusted network. We've sort of treated it like it was a trusted network over the last couple of decades. There's stuff where you're like, yeah, I don't really care, about that. And what we're going to find is all these compromises out there are just going to rise and rise and rise. It's not just ransomware. Ransomware, in a sense, is actually a boon because it shows that the vulnerability exists. It incentivizes people to harden systems, and it's better than actually having them hacked by a foreign military, which could cause actual physical harm, right? A guy who can be bought with money is better than a guy who can't be, And so I expect that to just rise and rise and rise. And so you need to have phones that are designed like Bitcoin, where, like with Bitcoin, security was the first class requirement. From the very beginning, it wasn't, as Dan Kaminsky, late Dan Kaminsky, my friend, brilliant guy. When the first security analysis of Bitcoin, he wrote that, Bitcoin should have failed on every level. This is a thing that spoke a fiddly protocol, and, that if you hacked it, you got all this money. But the key thing was that Satoshi didn't say, hey, security is like a later problem. Security was an intrinsic problem of the entire system. And if it wasn't secure, it didn't work, right? And so I think we're going to get to that level with tech, where systems will need to be hardened for them to be out there. And now the funny thing is, by the way, do you know who's going to be the hardened veterans, like the equivalent of like combat veterans in the future for the computer security?
No.
All of you,
Oh.
because all your smart contracts are going to get hacked. Well, some of them. Okay. And you will actually learn about what real exploits are. Okay. So now you may lose money, but that's better than losing your life. And so it's the crypto developers. I mean, if you think about it, who really sucks at computer security? Government IT developers. And you know who's actually really good at computer security? Successful blockchain developers. Okay. And the key is, like the military has this concept of like live fire rounds, right? Like the dark forest of Ethereum with miner extracted value and all these people trying various attacks makes you super paranoid about the logic execution of your thing, and you're conservative about certain pieces. You can be liberal about other pieces potentially, but you kind of know what pieces to harden, how to be conservative about stuff that's actually going to be taking enemy fire, right? And so crypto developers will actually be the ones who can stand up a state that is capable of functioning in network environment, as opposed to like, the alternative, by the way, is some like ISO 9000 process to certify that something is secure. The alternative to that, which is all nonsense, by the way, for the most part, is what is the valuation of your coin? Because if it has maintained a high valuation, has not been hacked for a long period of time, it's an imperfect but reasonable metric, better at least than an ISO audit, for the fact that you can't just print money at random or seize coins or what have you, right? Now, the reason I say imperfect is we can all name coins that have high valuations that are not that great. But nevertheless, it actually starts to be aligned with something which is closer, which is at least it hasn't been hacked yet, despite the fact that people would want to do so. It's a tangible, instantly quantifiable thing that sort of roughly measures the security of a system, certainly better than some ISO 9000 box checking audit that doesn't do anything.
Got it.
I know that was a long-winded answer, but
No,
you asked on something that pulled a thread.
No, that's great. Thank you.
Manohar?
All right,
I think last question, and then we'll wrap it.
great.
Thanks, Balaji. Thanks for wonderful ideas, and it's very lucky of us to have you here and listen to your talk. And basically, I have a question on like Ethereum versus Cardano, like on the smart contracts. So is it like, how are you seeing the future for the developer community specifically? Like,
No.
is it
No offense to Cardano, but I don't believe in Cardano.
Then you answered my question. Like,
yeah, I think, I mean, look, I have no beef with them or what have you. And like I am an investor in many Gen 3 blockchains. I hold stakes in pretty much everything. But like stuff I think is interesting, disclosure that I'm an investor or advisor to it. Stuff I think is interesting: Solana, Avalanche, Near Protocol, Polkadot, Zcash, Compound, Maker. A lot of the DeFi stuff is interesting. It's running within the Ethereum ecosystem. Polygon, BitCloud, actually, Mirror. The decentralized media stuff. Basically, I think smart contract platforms that are actually handling real volume are good, right? Again, I have no beef with the coin you mentioned, but that's just my personal opinion.
Awesome. All right, Balaji, thank you so much for joining us and doing this lecture. And if any of you guys build something that Balaji can take a look at or want him to look at, just DM him, like he said. Besides that, that's it.
All right.
Thank you.
Thanks. Okay.
Thanks.
All right. Bye.
Bye.
Thank you.
All right. So sorry that we couldn't get to the last question. I know we're a little bit over time. I have I know some of you still need to meet with your tech lead to flesh out your idea. Please make sure that if you haven't met with them yet, do it. Totally worth it. Yeah. I know Balaji threw out a lot of interesting ideas at you. I'd recommend just like letting those germinate in your head over the next few weeks. Maybe that could be an interesting second or third project for you to build on the blockchain. These are, quite big ideas. And like you said, I really like this framework about how, before you even start building, like write a blog post, put your ideas out there publicly, right? Because that's how crypto works. Like crypto is not like you go in your little cave and you build something and you come out 6 months later with the product. The more public you are about your product in the early days, honestly, the more successful you'll probably be, because the ethos of crypto is open source. So if you have ideas like this, like put them out in public and start like thinking about how to like build an MVP and then, create a landing page and then actually turning it into a startup. So with that, I don't know what you guys are all laughing at, but I will assume it's something funny.
Chat. It's the chat.
Oh, okay.
Family message saying second good project would be to disrupt Google. So.
Oh yeah.
I said right after counter.sol, they'll be ready.
Yeah. So funny. Okay. All right, guys. I'm gonna end the meeting and then we'll meet you guys tomorrow. Bye.
It's pretty.
Bye-bye.
Thank you. Bye.
Yeah.